Good afternoon, everybody. Uneducated economist here. So we just experienced the worst market sell-off since the 1987 Black Monday. Investors are in pure liquidation mode. It doesn't matter what they're in, they are running for the exits at this time. Stocks, bonds, precious metals, cryptos, everything goes. Everything is out of here. You know, I said it a while ago. I said keep your eye on the bond market. The next thing you're going to have to keep your eye on is the unemployment. Watch the layoffs. Once the layoffs start kicking in, we're going to see some really big stuff start happening here in this country. We saw the Federal Reserve step up today. They said, hey, we're going to come in with repo of $500 billion for 1 month terms and $500 billion for 3 month terms. And we're just going to throw money at these banks. We're going to liquidate the banks. And the markets hated the news. If they fired off a bazooka the other day by dropping interest rates, they nuked it today and it didn't help. Monetary policy has run its course. All the money printing in the world, the papering over of the problem is not going to solve this problem. We saw real estate booming. Everybody wants to be in real estate. Everybody wants to buy a house. There's housing shortage and housing just keeps going up. And you know why? It's because banks don't want to hold your house loan. See, if banks wanted to hold your house loan, the interest rates would be a lot higher and those houses would be a lot cheaper. But they keep dropping the interest rate and people keep running out there to refinance their home or go out there and buy a house because look how cheap the payments are. But what are the banks doing? They're packaging those things up into mortgage-backed securities. And so long as the investor wants to buy the mortgage-backed securities, they want to sell those house loans. They need you to sign the bottom line so they can put it into that box of those mortgage-backed securities and sell them off to the investors. But the investors are starting to liquidate. They don't want the mortgage-backed security. That's why you're seeing long-term house loans, the mortgages on 30 years go up. They follow the 10-year, true, but they're going to do that anyway, go up, not just because the 10-year is going up, but because investors are getting out of their trade. They're liquidating everything. I'm going to leave a link down in the description for you guys for the repo. If you're not understanding what's going on in the repo market right now, I'm going to leave a link to a video that I did back in September talking about the repo market, and that should explain everything for you. But understand right now that the liquidation of the banks, trying to keep them moving and loaning, it's over. The credit cycle has run its course. A lot of people told me, they were like, you can't eat your gold. You can't eat silver. Well, you can't eat paper either. You can't eat your stocks. You can't eat those dollar bills. You can't eat any of that stuff. And now we're in panic buy. People are running out there buying toilet paper because they don't know what else to buy. They know they should be doing something because there's a panic going on out there and they know they're going to use toilet paper, so that's the one thing they run out there and get. There was a panic buy in toilet paper back in the 70s when there was never even a shortage of toilet paper. It all came from a joke from Johnny Carson. He put a joke on his TV show saying, yeah, did you hear there's a run on toilet paper, that there's, toilet papers are clearing off the shelf. And everybody who heard that ran out there and started buying toilet paper and they cleared the shelves. And when people saw that the shelves were cleared of toilet paper, they ran out there and bought as much toilet paper as they could get. And next thing you know, there was no toilet paper to be had, but there was never any shortage. It was sitting in people's living rooms the entire time. It was in the closet. Hordes of it. And for months and months and months, it took forever before the panic finally dissipated. And the shelves started filling up with toilet paper again. And people were sitting with hundreds and hundreds of rolls of toilet paper in their house. But there was a time there that you could sell a roll of toilet paper for a lot of money because there was none to be had at the store. That is happening today. There is no shortage of toilet paper. But there is at the store right now because everybody's buying it up. Just like the face mask and just like the hand sanitizer and just like everything else that people are panic buying. And now you're starting to see the panic sell. Investors who do not want to lose any more money are getting out of the trade as fast as they can. I said this was going to happen. We knew it. And so now real estate's going to get hit by a double whammy. Not only are the mortgage-backed securities going to start going down, which they are, just go and look at, there's a ticker symbol out there. What is it? MBB, I think it is, or MMB. I can't remember exactly, but one of those two. Go check out that ticker symbol. That tracks, it's an ETF that tracks mortgage-backed securities, and you can see that it's dropping like crazy right now. Investors are getting out of that trade. And once the unemployment starts kicking up and the layoffs start kicking in, and people don't have the money to spend on their rent or mortgages, then you start seeing the mortgages come down. You're going to start seeing the housing come down, the house prices. Investors will get out of those real estate investments that they were in. You know, once people's houses go underwater where they end up owing more than what they could sell it for, then you're going to start seeing strategic foreclosures. People saying, I'm not paying any more for this house if I can't sell it for what I owe on it. You know, there is no shortage of houses out there. There's a shortage of houses to sell because people own more than one of them. There's houses all over the place here in my town that are empty. They're weekend getaways. There's speculation that they're going to flip them later. You know, once they get out of that, you'll see houses for sale for a lot less. You know, once the investors stop buying treasuries, once people say, man, this is just as much of a toxic asset as anything, and you have the Federal Reserve trying to step in and buy up all those treasuries with printed money, you know, you're going to see a very different story. You know, the only reason why treasuries are valued is because they had an interest rate attached to them. If you bought a treasury and you held it to duration, you could at least get an income from that because it had an interest rate attached to it. But now they're so low that it's a pure speculation. And I told you guys to look at corporate debt, high-yielding corporate debt. I said that's going to be a problem, and it's blowing up right now. As these investors are dumping that high-yielding corporate debt, saying these guys are toxic, these guys are not going to be able to make this payment, and they're trying to get out from that trade, the interest rates on them are going to rise. And those corporations, when it comes time to roll those things over into new debt, they're not going to be able to afford them. They will not be able to afford that higher payment. And what are they going to do? They're going to sell their stock in order to pay the bondholders. We've talked about this a number of times. See unemployment now. That's going to be the big one. You know, you got the lockdown in Italy proving to us they're the test subject. They're going to be what the rest of the world's going to do. They're going to shut down restaurants. They're going to shut down the bars. They're going to shut down they're already shutting down sporting events here. Once all that's money flowing. We're a service industry here in this United States. And if you don't have people in the service industry working, then you don't have jobs. You know, I saw where there was some airstrikes over in Iraq today, targeting Iranian forces. You know, a lot of people ask me, what is the future going to be like? I don't know. I can't predict the future. Nobody can. But there's a couple of things that I'm pretty sure are going to happen. We're going to have more war, more debt, more separation between the rich and the poor. You know, everybody's focused in on this virus when there is so much more to pay attention to. I'm not saying that this virus isn't a big deal. I'm sure it is for a lot of people, especially if you have the compromised immune system and, you know, you're elderly or whatever it is that you're fearful of. But they're shutting down schools. They're shutting down sporting events. They're shutting down institutions. Things are closing. Every time you shut the doors on something, that's money that doesn't flow. And investors recognize that. And that's why they're getting out now. That's why we had the worst day in the stock market since 1987. Most investors now don't even remember 1987. I mean, hell, I was 11 years old when that took place. I don't remember anything about the stock market. I remember, people talking about it, but I don't remember anything about the environment or the economy or anything that was taking place right then. And now here we have the worst stock market sell-off since then, and people are in a panic now. Panic buy, panic sell. Yeah. $500 billion. Think about this for a second, guys. $500 billion in short-term purchases of those treasuries for banks, to liquidate the banks. You know, $500 billion today and $500 billion tomorrow, that's $1 trillion. Prior to the financial crisis, the Fed's balance sheet was $850 billion. You know that? 12 years ago, the Fed's entire balance sheet had $850 billion. And in 2 days, they're going to have better than the equivalent of that, of the entire Fed's balance sheet from just 12 years ago. That's scary. That, to me, is mind-blowing. You know, all the Fed talk, all the administration promises, everything that's going on out there, investors don't care. They don't hear it anymore. It's like crying wolf. Like the first time everybody panics and does something about it, and now they're just like, we don't even care. Whatever you say is BS. Because whatever you're promising today, next week it's going to be a whole nother story. I was looking at the stock futures for tomorrow, and they're already down. Not a lot. Well, at least it wasn't when I started the video, but we'll find out here after I end the video here where we're at. But I would assume that tomorrow we're probably going to have more sell-off. Nothing has changed the attitude of these investors. They're running for the exit as fast as they can right now. In all categories. The only investors who are making money right now are people who are shorting the market. Yeah. I don't know what else to tell you guys. This is taking place. There's no joke or anything going on here. This is not funny stuff. This is scary. This is scary times. I mean, people who have invested in the stock market over the last year have lost everything that they have put into it. It's all gone. As far as the money that they had made. And we're going to find out how bad this gets tomorrow if it continues. If we have more panic selling tomorrow, I would imagine Monday is going to be a very bad day. Next Monday. If we start seeing more of what's going on in Italy take place around the world, we're going to have a very bad week next week. Yeah, I'm not sure what else to tell you guys. I'll see you tomorrow. Uneducated economist. You guys let me know.